So welcome to all of you Shiksha 360, and today basically we will discuss very important chapter, that is chapter number 5 of PPB. Clear? So this chapter basically we have to cover in two parts. All the important parts basically we have to cover here, and that is very important for the examination point of view. So let's start. So this chapter basically it is, we can say that basically divided into two parts. First one is the capital market and second one is the SEBI. So first of all, basically we will discuss regarding the capital market under that. So roles and functions of the capital market, Securities and Exchange Board of India. Clear? Part one. So let's start. So for starting any business, clear, basically for starting any business, an entrepreneur, clear, basically an entrepreneur basically needs investment, clear, in the form of the capital, clear. So for starting any business, an entrepreneur basically needs investment basically in the form of the capital. Depending upon the size of the product, the requirement of the capital will vary. Clear? Basically depending upon the size of the product, the requirement of the capital basically will vary. Clear? So in most of the cases, the entrepreneur, clear, basically in most of the cases, basically the entrepreneur may not be able to bring in the required capital. Clear? In most cases, basically the entrepreneur basically may not be able to bring in the required capital basically from his own money. Clear? Basically to bring in the required capital basically from his own money. Clear? So at that time, basically what will happen, the entrepreneur basically may have to borrow the money basically from the banks, basically from the banks or financial institutions, friends or relatives. Clear? So in general, basically in most of the cases, the entrepreneur, clear, basically the entrepreneur basically may not be able to bring in the required capital. Clear? The entrepreneur basically to bring in the required capital basically from his own sources. Clear? From his own sources. Clear? So at that time, basically what will happen? So the entrepreneur basically may have to borrow the money, clear, basically from banks, financial institutions, friends or relatives. Clear? So borrowing has a cost. Clear? Basically borrowing has a cost because they have to pay. Clear? Along with the principal, they have to pay the interest. Clear? Basically they have to pay the interest. So borrowing has a cost in the form of the interest. Clear? Basically borrowing has a cost in the form of the interest, and this may prove to be a severe burden basically on the profitability of the business. Clear? So borrowing has a cost. Clear? Basically borrowing has a cost in the form of the interest. Clear? Basically in the form of the interest, and this may have proved to be a burden basically on the profitability of the business. Clear? Because along with the principal basically you have to pay the interest. Clear? So particularly in the case of the project, basically with the long gestation periods, clear, long gestation period, like basically we can say that a particular project it is basically for 10 years, 15 years, 20 years. Clear? So at that time basically there is basically more, they have to pay more interest on these things. Clear? So at the same time, interest cost basically has some advantage also. Clear? Basically interest cost basically, like basically when you are filing the tax, basically on that basically you are showing that basically this much interest basically you are paying that. Clear? So on that basically you have some advantage also. Clear? So at the same time, interest cost basically has some advantage also. So the promoters will have to decide the financing aspect. Clear? So basically the promoters basically will have to decide the financing aspect of the project, taking into consideration the various costs involved. Clear? So the promoters, clear? So here basically what we are saying that the promoter basically will have to decide the financing aspect of the project. Clear? Financing aspect of the project, taking into consideration, clear, basically taking into consideration the various cost involved. Clear? Basically taking into consideration basically the various cost involved. So some of the banks and financial institutions, clear, basically when they lend, so basically what they demand, basically they demand a security. So since the banks or financial institutions, clear, basically may demand a security basically for their loan in the form of the collaterals. Clear? Basically since the banks and financial institutions may demand a security for their loan in the form of the collateral, the promoters may choose. Clear? So in that case basically the promoters basically may choose to raise a major part of the requirement, clear, to The promoter basically may choose to raise a major part of the requirement of capital money from the public. Clear? The promoters. So what they are saying, that please try to understand. That is basically they are not trying to take the money from the banks. Basically, in the place of that, basically they are trying to raise money from the public. Clear? That is basically they want to issue the shares. And if any company basically is issuing the shares first time, that is basically known as the IPO. Initial public offering. So initial public offering, like I think all of you are aware regarding the LIC IPO. So first time basically LIC basically issuing the shares, that is basically known to be as the LIC IPO. Clear? Why I'm discussing, because at that time basically many of the public sector banks are open, even on the Saturday and Sunday. I think on the Sunday. Clear? I am not remembering exactly the date. I think near about in the month of the May. Clear? There is launching of the IPO of the LIC. Clear? Because at that time basically they are issuing the shares first time in the market. Clear? So since the banks or financial institution basically may demand a security for their loan in the form of the collaterals, so the promoters basically may choose to raise a major part. Clear? So at that time basically the promoters may choose to raise a major part of the requirement of capital money. Clear? The imported promoters basically may choose to raise a major part of the requirements of capital money basically from the public by offering to the later. So what they offer at that time? Certain instruments like equity shares, debentures, bonds, and so on. Clear? So basically later on, basically what they issue, that is equity shares, debentures, bonds, and so on. So in order to raise money, clear? So in order to raise money basically from the public, SEBI has prescribed certain rules. Clear? In order to raise money basically from the public, basically SEBI has prescribed certain rules and regulations. And by complying with the same, clear? Basically, and by complying with the same, the promoters can raise their financial requirements in a market known as the capital market. Clear? So in order to raise money basically from the public, SEBI has prescribed basically certain rules and regulations, and by complying with the same, the promoters can raise their financial requirement. Clear? The promoters can raise their financial requirement in a money in a market basically known as the capital market. Clear? The promoters can raise their financial requirements basically in the market basically known as the capital market. So what is capital market? Because we have two types of the market. First one is the capital market, next one is the money market. So capital market is a market for long-term debt. Clear? Capital market, it is a market basically for the long-term debt and equity shares. In this market, capital funds basically comprising, clear? So basically in this market, basically capital funds comprising both equity and debt are issued and traded. Clear? So basically in this market, capital funds, clear? Basically what it comprises, clear? So capital funds basically comprising both equity and debt are issued and traded. Clear? So in this market, basically capital funds comprising both equity and debt are issued and traded. This further also includes private placement sources of debt and equity, as well as organized markets like a stock exchange. Clear? So sometimes basically in the examination, directly basically they will ask the question. Stock exchange basically it is a part of which market? Clear? So please tell fast now. Stock exchange basically it is a part of which market? Clear? So basically it is a part of the capital market. Clear? Stock exchange basically it is a part of the capital market. Clear? So please remember that sometimes basically you will get directly this question in the examination. Clear? Basically stock exchange basically it is a part of which market? So now basically we have to further discuss basically capital market can be further divided basically into the primary and the secondary market. Clear? Into the primary and the secondary market. Clear? So what is primary market? What is secondary market? Like I have already discussed one thing here. Clear? So basically when any company issues the shares first time in the market. Clear? So basically when any company basically issues the share basically first time in the market. So basically they will issue in the form of the IPO. Clear? Basically they will issue in the form of the IPO, that is initial public offering. Clear? So that is to be issued basically in the primary market. Clear? Primary market. When that shares first issued in the IPO, clear, and after that basically they are available in the stock exchange. That is basically known as the secondary market, clear. Basically that is known as the secondary market, clear. Just remember this thing so that every time basically you are able to remember this definition, clear. So every time basically you are able to remember this definition if you remember basically in this way. So now let's discuss basically what is primary market, clear. So in the primary market, securities, what are they saying? That basically like shares, bonds or debentures, clear. So in the primary market, like securities basically such as shares, bonds or debentures, clear, basically are offered to the public, clear. Basically are offered to the public basically for subscription for the purpose of raising capital or fund, clear. So basically in the primary market, securities such as shares, bond or debentures are offered to the public for subscription, clear. Basically are offered to the public basically for subscription. For what purpose? Basically for the purpose of raising capital or fund, clear. Basically for what purpose? For the purpose of raising capital or fund, clear. So the issue of securities, clear, the issue of securities, shares or bonds in the primary market, clear, the issue of securities, shares or bonds basically in the primary market is a subject to the fulfillment of a number of pre-issue guidelines by the SEBI and complies to various provisions of the Companies Act, clear. So basically they have to be follow all the SEBI guidelines, clear. Basically they have to be follow all the SEBI guidelines and complies to various provisions of the Companies Act, clear. So the primary market basically it is classified into public issue market and private placement market, clear. So basically primary market it is further divided into two parts. First one is the public issue market. Second one is the private placement market. Clear. So the primary market is classified into the public issue market and the private placement market, clear. So there are clear. So basically there are a number of intermediaries in the primary market, clear. So basically there are a number of intermediaries basically in the primary market such as merchant banker, issue manager, lead arranger, etc., clear. So there are a number of intermediaries basically in the primary market such as merchant banker, issue manager and lead arranger, etc. Okay? So banks participate basically in the market basically for subscription to issues as long as banker to the issue, arrange and handwritten, etc. Clear. Basically as long as basically banker has to issue, arrange and handwritten, etc. Clear. So please remember all these markets, clear. How basically the process is to be going on, clear. Nothing typical question basically they will ask in the examination, but you have to remember the basic things, clear. Basically sorry, I think I have also not handwritten, basically it is underwritten. Clear. Underwriters, etc. Clear. I have also thinking that there is some typing error, clear. So this is regarding the primary market, clear. That is primary market. Now next move to the secondary market, clear. Basically secondary market basically where the securities are already available. So secondary market basically refers to a market, clear. Basically secondary market basically refers to a market where securities are traded. Where securities are traded basically after being initially offered to the public, clear. Basically where securities are traded basically after being initially offered to the public basically in the primary market and or listed on the stock exchange, clear. Basically and or listed on the stock exchange, clear. Secondary market basically refers to a market where securities are traded basically after being initially offered, clear. Basically after being initially offered to the public in the primary market or on being listed on the stock exchange, clear. So secondary market basically what it comprises, basically it comprises of the equity markets and the debt markets, clear. Like primary market, basically it is considered two parts: public issue market and private placement market. Similarly, secondary market basically consists of two parts. First one is the equity markets. Second one is the debt markets. Clear? So secondary market basically comprises two markets, that is equity markets and the debt markets. Clear? So secondary market basically it is the trading avenue. Clear? Basically secondary market basically it is the trading avenue in which already existing or pre-issued securities. Clear? Basically secondary market basically it is the trading avenue in which already existing or pre-issued shares. Clear? Basically secondary market basically it is the trading avenue in which already existing or pre-issued securities are traded basically among the investors. Clear? Clear? So secondary market basically it is a trading avenue in which the already existing or pre-issued securities, clear, basically in which already existing or pre-issued securities are traded basically among the investors. Clear? So secondary market basically could be either an auction or a dealer market. Clear? Basically could be either an auction or a dealer market. Clear? So secondary market, that is basically either could be an auction or a dealer market. So while stock exchange basically it is a part of an auction. Clear? While stock exchange basically it is a part of an auction market. Clear? Over the counter basically market basically it is a part of the dealer market. Clear? So please remember that. So stock market, it comprises of the equity markets and debt markets. So secondary market, clear, it is either basically auction or dealer. Like stock exchange basically it is under the auction. Under the dealer market basically we have over the counter. Clear? Under the dealer market we have. Okay, so please tell fast if you have any doubt, any query up to this much point. Okay, so now move to the next one. So for the general investors, clear, basically for the general investors, the secondary market, clear, basically for the general investors, the secondary market basically provides an efficient platform for trading of securities and the price discovery. Clear, basically for the general investors, the secondary market basically provides an efficient platform. Clear, the secondary market basically provides an efficient platform basically for the trading of securities and the price discovery. So for the managers of the company, secondary, that is equity markets, serves as a monitoring and control conduct. Clear, basically for the general investors of the company, clear, security market basically serves as a monitoring and control conduct. What it means that basically by facilitating value enhancing control activities, enabling implementation of incentive based management contracts, and aggregating information, clear, basically, and aggregating information basically via price discovery that guides basically management decisions, clear, basically that guides management decisions. So banks facilitate, clear, so basically banks facilitate secondary market transactions, clear, banks facilitate basically secondary market transactions by opening direct trading and demat accounts to the individuals, clear, banks facilitate, clear, like basically how the individual basically will trade on the secondary market basically through the demat accounts, clear, basically through the demat accounts, clear. So banks facilitate secondary market transactions by opening direct trading and demat accounts to the individuals and companies, clear. So banks also extend credit against securities, clear. Banks also extend basically credit against securities. So they may also act as a clearing house banks, clear. So banks also extend credit against securities and they may also act as a clearing house banks, clear. And further basically they may also act as a clearing house banks. Okay. So now how many stock exchanges in the India, clear, and basically what are the starting exchanges, stock exchanges, clear. So basically there are 22 recognized stock exchanges in India, clear. So basically there are 22 recognized stock exchanges in India, and in the form of legal structure, the stock exchange in India basically could be segregated into two broader groups, clear. So in the terms of legal structure, basically the stock exchange in India basically could be segregated basically into two broad groups. First one is the 19 stock exchange, which were set up by the companies, clear. Basically 19 stock exchanges basically which were set up by the companies, either limited by the grantees or by the shares, clear. So in the terms of legal structure, basically the stock exchanges in India basically could be segregated basically into two broader groups. First one is the 19 stock exchanges basically which were set up as companies, either limited by the grantees or by the shares. Second one, basically there are three stock exchanges, clear, basically which were association of persons, clear. And second one, that is basically three stock exchanges basically which were association of persons. Like first one is the Bombay Stock Exchange, second one is the Ahmedabad Stock Exchange, third one is the Madhya Pradesh Stock Exchange, clear. And there are further basically three stock exchanges basically which were association of persons. First one is the Bombay Stock Exchange, second one is the Ahmedabad Stock Exchange, and third one is the Madhya Pradesh Stock Exchange, clear. Third one is the Madhya Pradesh Stock Exchange. So to improve the efficiency, clear, basically to improve the efficiency of the exchanges, it is necessary to corporatize them, clear. So corporatization, clear. Sometimes basically directly in the examination, basically they will ask 0.5 mark question. What is corporatization, clear? So basically it is the process of converting the organizational structure of the stock exchange, clear. So basically corporatization, basically it is the process of converting the organizational structure of the stock exchange from a non-corporate basically to a corporate structure, clear. Corporatization basically it is the process, clear. Corporatization basically it is the process of converting the organizational structure of the stock exchange, clear, basically of converting the organizational structure of the stock exchange from a non-corporate to a corporate structure, clear, of the stock exchange basically from a non-corporate basically to a corporate structure, clear. Traditionally, some of the stock exchanges in India were established as AOPs, example Bombay Stock Exchange, Ahmedabad Stock Exchange, and Madhya Pradesh Stock Exchange, clear. Example Bombay Stock Exchange, Ahmedabad Stock Exchange, and Madhya Pradesh Stock Exchange, clear. So corporatization of such exchanges, it is the process of converting them into the incorporated companies, clear. Corporatization basically it is of such exchange, basically what is that, basically it is the process of converting them basically into the incorporated companies, clear, into the incorporated companies, clear. Sometimes basically they will ask basically which were comes under the association of persons, clear, AOP. So basically please remember that Bombay Stock Exchange, Ahmedabad Stock Exchange, and Madhya Pradesh Stock Exchange, clear, and Madhya Pradesh Stock Exchange, clear. Basically these are comes under the association of the persons. So now next one, very, very important, clear. This question they have already asked basically in the 2019 and 2020, clear, 2019 or 2020, clear. Definitely, I think in the 2019, clear, basically this question in one of the examination, in one of the set, clear, basically they have asked basically what is the meaning of due mutualization. So due mutualization basically refers to the transition process of an exchange, clear. Basically what is the meaning of demutualization? Basically demutualization basically refers to the transition process of an exchange from a mutually owned association, clear, basically from a mutually owned association to a shareholders owned company. Clear? From demutualization, that is basically refers to the transition process of an exchange. Clear? Basically transition process of an exchange, basically from a mutually owned association. Clear? Basically from a mutually owned association to a shareholders owned company. Clear? Basically to a shareholders owned company. So in other words, basically we can say that transforming the legal structure of an exchange. Clear? Basically transforming the legal structure of an exchange from a mutual form to a business corporation form is referred to as demutualization. Clear? So in other words, basically we can say that transforming the legal structure of an exchange. Clear? Basically transforming the legal structure of an exchange basically from a mutual form to a business corporation form. Clear? Basically from a mutual form basically to a business corporation form is referred to as a demutualization. Clear? Basically is referred to as a demutualization. So the above in effect, clear, the above in effect basically means that after demutualization, clear, the above in effect basically means that after demutualization, the ownership, the management, and the trading rights. Clear? So the above in effect basically means that after demutualization, basically the ownership, the management, and the trading rights at the exchange are segregated basically from one another. Clear? So the above in effect basically means that after demutualization, the ownership, the management, and the trading rights, clear, the ownership, the management, and the trading rights at the exchange are segregated basically from one another. Clear? Are segregated basically from one another. So in a mutual exchange, the three functions of the ownership, management, and trading are intervened. Clear? So after demutualization, basically the ownership, the management, and the trading rights, clear, basically at the exchange are segregated basically from one another. Clear? They are to be segregated, separated. So in a mutual exchange, the three functions of the ownership, management, and trading are intertwined basically into a single group. Clear? Into a single group. So here the broker members of the exchange, clear, basically here the broker members of the exchange are both the owners and the traders are on the exchange. Clear? Here the broker member of the exchange are both the owners and the traders on the exchange, and they further manage the exchange as well. Clear? And further they manage the exchange as well. Clear? So that is basically the broker members. Basically, who are the broker members here? That is either basically both the owners and the traders. Clear? Owners and the traders. Clear? So a demutualized exchange. Clear? On the other side, basically, what is the meaning of demutualized? A demutualized exchange basically on the other hand basically has all the three functions clearly segregated. Clear? Basically has all the three functions basically clearly segregated, that is separated. Or all the three functions are to be dealt by the three different persons. Clear? Three different persons. Clear? That is the ownership, the management, and the trading are in the separate hands. Clear? So a demutualized exchange. Clear? Basically on the other hand, basically a demutualized exchange, basically on the other hand, has all the three functions basically clearly segregated. Clear? Basically has all the three functions basically clearly segregated. That is the ownership, the management, and the trading are in the separate hands. Clear? The ownership, the management, and the trading are in separate hands. Clear? So please tell fast up to this much point. It is clear to all of you basically what we have discussed. That what is capital market, what is secondary market, what is primary market. Clear? So there are many more points basically which we have to cover in the next session. So first of all, basically just basically we will cover this point. So the BSE, the NSE, and OTCEI. Clear? The and OTCEI, that is basically over the counter. Clear? OTCI basically what is that? Over the counter exchange of India. Clear? Over the counter exchange of India. Clear? Basically are not only corporatized but also demutualized. Basically with the segregation of ownership and the trading rights of the members. Clear? So the BSE, the NSE, and the OTCEI, that is over the counter exchange of India. Clear? Basically are not only corporatized. Clear? Are not only corporatized basically but also demutualized. Basically with the segregation of ownership and the trading rights of the members. Clear? Basically with the segregation of ownership and the trading rights of the members. Clear? And the trading rights of the members. Sometimes basically they will ask in the examination basically when the NSE was started basically in the year 1992. Clear? In the year 1992. By the banks and financial institutions including IFCI, that is Industrial and Financial Corporation of India, ILF&FS, Industrial Credit and Investment Corporation of India, that is ICICI, PNB, and a General Insurance Corporation. Clear? And a General Insurance Corporation. Clear? So please remember all these points. This is the basic information. In the next session, basically we will discuss regarding the stock brokers, and definitely from these points, that is basically financial products or instrument deals. within the secondary market. Clear? Basically, from this point, you will also get definitely one question, clear, which we have to cover in the next session. Clear? And most probably the question basically will be asked basically what are the various types of bond? Coupon bond, zero coupon bond, convertible bond. Clear? These are most important points for the examination point of view. Clear? Basically, which we have to cover in the next session. Clear? Hope basically with the introduction of this chapter, you are able to understand some of the points like what is our IPO, basically in which market to be issued, basically stock market, basically it is under which market, either basically it is the primary market or in the secondary market. Clear? So all these things, please remember that I will forward you the slides also, along with basically we will discuss the questions. Clear? So thanks to all of you for joining this session.